If you're doing an SIP in mutual fund, don't stop. Seriously, don't stop, because for most of the people, that's still one of the best way to build the wealth. But if you ever thought, can I do something similar in direct stocks? Then don't make the same mistakes what I made earlier in days. When I started investing, I simply bought good companies every month, like HDFC Bank, TCS, Infosys, Reliance. Every month I bought. I thought that's the way of doing investing. It wasn't. One small rule completely changed the way I invested. Today, I'm going to share the rule with you, not my advanced strategies, not any trading strategies, just a simple framework that any beginner can start following from today. Before going into the video, let me ask you something very simple. Suppose HDFC Bank was available at 800 rupees now. You bought it happily. 6 months later, same bank, same management, same business, but now it's available at 1000 rupees. Should you still buy the same quantity? Most people never ask this question. Their SIP simply keeps buying. That's where I started thinking, maybe a good company is not only enough, I also need to look at sensible pricing where I am buying. That one thought completely changed my investing journey. Before I show you the framework, let's agree upon one thing. We are not trying to buy the stock, we are trying to buy great business. And even great business becomes expensive, even the great business temporarily become unpopular. Markets overreact, sometimes too optimistic, sometimes too pessimistic. Eventually, quality business usually move closer to their fair value. I simply wanted to take the advantage of that behavior, which is mean reversion. Now, the next question becomes, which company, Santosh? There are more than 5,000 listed companies. Beginners don't lose money because India has very few companies. They lose money because they have too many choices. So I reduced everything to only 23 market leaders in banking, IT sector, FMCG, auto, finance, consumption, and paint. Business that have survived for decades, companies that have proven themselves through multiple market cycles. Could there be other good companies? Absolutely yes. But when you are starting, simplicity beats the complexity. Now comes my first investing rule. Just note, I did not say it's a magic indicator. I did not say it's a holy grail. This is a simple rule I gave myself. I stopped buying quality companies at any price that was available in the market. Instead, I only became interested when the company started becoming temporarily unpopular. Personally, I use 200-day moving average as a filter. If a company is below its long-term trend, I start paying attention. If it's around 10 to 15% below, it becomes even more interesting for me. Can you use something else? Of course. But whenever you use another rule, stay consistent with the monthly workflow. Now, let's make this furthermore practical. Suppose today is the first Sunday of the month where you got the salary. You have 21,000 rupees allocated for investing. You don't open Zerodha to buy your favorite stock. Instead, open your watch list, go through all 23 companies that I have given, which are market leaders. Ignore every company that doesn't satisfy your condition. For me, it is basically 200-day moving average. Now, maybe only 5 companies satisfy this. First, rank them further, which one is offering the best opportunity today for your money. Invest only in those companies. See just what happened. Instead of emotions, you now have a process in your hand that is going to support your wealth building. Now comes the biggest mistake I actually made. I started falling in love with one stock. When it fell, I bought more. When it fell again, I bought even more. That usually many of us used to do it. But today, I never do that. Every position starts small. Suppose my planned portfolio is 2.5 lakh. 3% is roughly around 7,000. That becomes my first buy in any stock that I'm actually filtering it out. Not because I know I'm right, because I accept the fact that I can be also wrong. If the stock falls another 10 to 15%, I'll add little more, not doubling it, not tripling it. I will actually plan to allocate according to my allocation plan. The objective isn't to catch the exact bottom. The objective is to survive until the mean reversion happens. And some people will ask, Santosh, what if no company is below the buying zone, whatever the rule we have created for ourselves? Simple. Cash is also a position. Good investment isn't forcing yourself to buy every month. It's about waiting patiently. The good news is, since we work on 23 stocks across different sectors, some or other opportunities will be naturally appearing. For example, we'll go to the trading view and see the current situation of all the 23 stocks. Before going to the trading view, I wanted to put a very clear disclaimer that this is only for the educational purpose. The stocks discussed here are the illustration purpose. Even though they are market leaders, the decision has to be taken followed by your own analysis. Because I am not a SEBI registered advisor, I am sharing it only for the educational purpose of my community and you. Let us go to the stock, like for example Bajaj Auto. Just kindly note, I have actually hidden last 1 month chart to comply with SEBI regulation. For example, Bajaj Auto, it's about 200-day moving average, which is my rule, so I am just going to ignore it. Maruti Suzuki, yes, it's actually available approximately 10% before 1 month. Right now we have to see. Axis Bank, yes, it's above, so I'm going to ignore it. HDFC Bank, it's right now below 14% to the DMA. We can consider it. ICICI Bank, slightly lower than the 200 DMA, but I would actually ignore it when the other stocks are available at much discount to the 200 DMA. So Kotak Bank, yes, it's very near. SBI, it's above, so I will ignore it. LT, it's above, I will ignore it. Reliance, Yes, it's actually 8%. You can put a GTT and forget if you really wanted to purchase this kind of situation. When it is 8%, you can put a GTT at 10% and you can forget and go to your day job so that the GTT will take care of your purchase. And Titan, it's above, so you'll ignore it. Hindustan Unilever, it's also below but 7%. If you can wait for 10%, it would be great. So you can use the GTT. And ITC, it's already 16%, which is a good pick for now. Nestle, it's above. Pidilite, it's above. HCL Tech. Okay. So when you go into the IT bucket, it's very subjective because one half of the people is believing that AI is going to crash the Indian IT sector, but another half of the people believes that it actually has more potential than before. So I am actually falling into the second category because AI can definitely change the game in future, but to change the game for enterprise, these implementers who are actually going to give the AI enterprise value are going to be the Indian IT sectors. That's what my belief is. Let us see who becomes right in the future. The time has to tell. But in IT sector, you can choose to avoid or choose to go depending upon your conviction. So for now, HCL Tech, it's like 20% below 200-day moving average. Infosys, it's below 200-day moving average, 17%. TCS, it's below 200-day moving average, kind of 20%, which is actually good bet for me. But you take your decision as per your analysis and your conviction. And Bajaj Finserv, it's already 13%. Bajaj Holding, it's 8%. It's not a good deal, but still. Bajaj Finance, yeah, it's also very near before 1 month. Just kindly notice. HDFC AMC, it's 6%, which is not a great deal for us. And HDFC Life, yes, 20%, which is great deal for me before 1 month. I don't know where it is actually staying now. And Asian Paints. Okay, see, just now, before few months, we have been discussing about the competition pressure, loss of market share, and the stock came below 200 DMA many times. Okay, one time it came and again it went up. One time it came, again it went up. So this is the very exact reason. Now I have become not an investor. I have become a value trader kind of things because I always used to purchase the quality stocks when it is trading far below 200-day moving average, and I will actually sell it when it is trading far above 200-day moving average. This is how I churn the money. Instead of investing, I actually see a value trading opportunities. I churn the money, which is actually making a better CAGR, but for a beginner, it's actually best to start accumulating shares actually when it is trading below 200-day moving average by 10 to 15% discount. So that's how we see in every market situation, whether it is bullish market, whether it is bearish market, some or other sector will be always giving you opportunity. The idea is to pick the stock which is discounted in the market, which is unpopular in the market, so that it makes a better value for your money which you're investing every month, not investing your money in same stocks forever. This framework is exactly how I started before 2 years. Over time, I realized something even more powerful. As I said, instead of only accumulating the stocks in SIP mode, I started rotating the money from overvalued business to undervalued business. That's what eventually became my value trading framework. Last year, using the same principles and framework, I generated 4 lakh of profits, and I also published in one of my YouTube video, and I'll attach the link in the description and actually attach the card somewhere here. You can go and check how we have progressed slowly by understanding things, how the market is actually working. If you'd like to learn about some of my frameworks, I have already put out a 52-week high-low strategy in my channel. You can check out the link in the description, or I'll attach the card somewhere here for the 52-week high-low strategy. That is one of the strategies that I follow out of 10. So if you are actually interested in understanding how this value trading concept works and how I am actually making my own trade decisions, then you can actually consider checking out the link in the description, where we have put out some of the private discussion that we actually do in the community to understand what the community does, and also few of the testimonials of people who are actually in the journey with happy investing. Hope you enjoyed the video and found some new approach to do the SIP in direct stocks. If you have found the value in the video, please hit the like button and share it with your friends and family with whom you will discuss on the stock market related topics. And please subscribe to the channel if you have not subscribed it. That will actually give me a little bit motivation to more videos and bring more value to this channel. Finally, thanks for your time. Thanks for your patience. Happy investing.